Berkshire's our largest position by far. We've added to it in recent weeks. We've owned the stock for the 13 plus years that we've been managing money professionally, and we owned it personally before then. So we're biased, but we love the company, and we think Warren and Charlie are the best investors and the best CEOs, managers of any company we're aware of. And the stock price is insanely cheap in our opinion, given how well the business is doing. So the most important things we're looking at are Warren and Charlie are getting along in years, and are they still at the top of their games? And in our opinion, absolutely. It's incredible to see guys this age getting better with age. And then secondly, how's the business doing? And never been better. Just extraordinary how well the operating businesses are doing. 8 different Berkshire subsidiaries would be in the S&P 500 individually were they not part of Berkshire. So it's just an extraordinary collection of very large, very profitable businesses that are basically, all of them are going gangbusters. The only small area of weakness is anything related to the U.S. residential housing market, but that's a pretty small part of Berkshire's business. And the insurance operations reported very nice profits as well. That's the other big part of Berkshire's operations in addition to the regular operating businesses. So those were the two big takeaways as shareholders. And then there were just a lot of fun questions and little tidbits here and there that we were particularly intrigued to hear Buffett talk about coming very close to doing a $22 billion deal. And he's got a very high-class problem. More than $1 billion a month is pouring into Omaha, and he's got allocated, and he's done a pretty darn good job, from $34 billion with Burlington Northern to $9 billion with Lubrizol to the $5 billion investment in B of A to putting $11 billion to work in IBM. And he just continues to build this incredible collection of businesses, yet the stock price is been flat for 5 years, and the intrinsic value of the business has probably doubled in that 5-year period. So we can't explain it, but as investors, we love to see enormous mispricings of wonderful, safe businesses, and that's what this is.
Have you heard anything that would change your mind on the intrinsic value of the business?
No, if anything, in the first quarter, we increased our intrinsic value by $8,000 from $178,000 a share per A share to $186,000, strictly based on the investments per share going up. The Berkshire stock portfolio had a wonderful quarter with the markets up. So even though the operating businesses had another fabulous quarter and the insurance businesses had very low losses and therefore were highly profitable, so you could argue the operating businesses we should have increased that value as well. But to be conservative, we didn't, and we're still up at the mid 180s per share, and the stock here languishes in the low 120s per share. So intrinsic value, the margin of safety just got wider.
Can you remind our viewers who may not be familiar with your valuation of Berkshire, how do you go about arriving at your intrinsic value estimate?
Sure. There are a number of ways to do it. You can just put a multiple of book value on it, for example, but we value Berkshire the way we'd value any business, which is take the cash and investments, and just value them at par. So the cash is worth cash, the bonds are worth whatever they're worth, the stocks are worth whatever the market price is. Very simple. There's not a lot of ambiguity about that. It's a little trickier, but again, what you do with any company is you look at the earnings of the business and you put a reasonable multiple depending on the nature of the business and so forth. One of the most interesting questions that came out of the annual meeting, we're very glad someone else asked, is what multiple would you, Warren and Charlie, pay for Berkshire's non-insurance operating businesses? And they said 9 or 10 times pre-tax earnings. They would be a buyer. Now that's not intrinsic value, of course, because they never buy anything at intrinsic value. They buy well below intrinsic value. So what they're saying is that they think intrinsic value is at 12, 13, 14, 15 times pre-tax earnings. So the way we value Berkshire is we just take the investments per share, about $106,000 per share, and then we look at the earnings, the pre-tax earnings of the operating businesses. So you take $5 billion a year, Burlington Northern is their run rate earnings, et cetera, the $1 billion a year from Lubrizol. You just add up all the 75 plus operating businesses, and we come up with about $8,000 per A share of operating earnings. And that includes a little bit of insurance earnings, which some people say you shouldn't include those at all, but Berkshire's insurance operations over the last 8 years have generated $16 billion of profit, about $2 billion per year on average. Now those earnings are highly seasonal or cyclical. They fluctuate a lot depending on whether you have catastrophe losses in a particular year. But we think Berkshire should get some credit for that as well. So I'd say 90% of our $8,000 a share of earnings is the operating businesses. We put in a little for the insurance, and then we put a 10 pre-tax multiple on all of that. So 8,000 times 10 is 80,000. So you got 106 plus 80 gets you $186,000 per A share. And people go. We have plenty of arguments with people who think it's who apply a lower multiple or they give a haircut to the investments per share. We have not ever encountered anyone who comes in lower than about $150,000. So even if our 186 is a little high, and you can easily get to numbers over 200 without being too aggressive either. So we're comfortable with our number, but even if you want to use a lower number and more conservative, even more conservative assumptions than what we think are our conservative assumptions, the stock's still very cheap, and it's hard to see much downside with the stock in the low 120s, and they've got $106,000 per share of cash and investments. So one way to think about it is the market is valuing Berkshire's operating businesses at 2 to 3 times pre-tax earnings, and that's crazy.